All right, welcome everyone to the Bitcoin Yield podcast. We are now on episode 3, so we're rocking with some great guests so far. And today, I have Shone Anstey on the pod. How are you, my friend?
Thanks for having me on, Jake. I've been great. It's been a very interesting stretch here the last 8 weeks, but highs and lows and all the stuff in between. But we feel like the future is quite bright. So
It's a great time to be a Bitcoiner, 100%.
yeah, it's when
And
it's made.
yeah, and so you popped up on my radar because I'm doing this new project called Bitcoin Yield, trying to become the number one space to make sense of where to put your BTC to work safely, or at least know the risks. And you guys are doing some cool stuff at Liquid. So we're going to talk today definitely about treasury companies, about Liquid, and the Lightning Network and getting yield on BTC. But let's start from the top. Give us a high level overview of some of your background and what is Liquid Technologies.
Yeah, what is liquid technology? My background, I've been in Bitcoin since 2012. Really dabbled a bit in 2011, but yeah, I did a bunch there and I've built out, Bitcoin mines, line software in the space that's actually part of a public company. And that was all part about cracking down the doors to governments and regulators and getting things over the line. My other company owns Canada's second largest exchange. That's publicly traded as well, and it's fully licensed and we've done all those things through the public markets over the last 10 years. So it's been quite the journey. And my background is tech from a long time ago, from when the internet was being built in the 90s. And so I've really taken that lesson to heart in terms of, what is Bitcoin? Where is it going? Anybody's heard me speak before. I always keep saying, Bitcoin and everything we see here is an extension and a continuation of the revolution of the internet. And it really extends the base layer plumbing of the internet itself, as we know in our tech circles, the OSI stack, which is really just like quite literally just how the internet works, and we're using it right now. Layer 1, that's the Wi-Fi. Layer 7, there's websites, a bunch of stuff that was built over time. And Bitcoin came along and solved the trust issue that we tried to do for a long time. We didn't know how to do it. It was a big discovery and an amazing thing that worked out. So when it was presented to me, and I looked at it from someone I know, it was like, of course, we're going to have native digital money for the internet, and it's solved for trust. Now, where my career got interesting is where I went down the money rabbit hole. As I was down the tech rabbit hole long before that. So I got it from a tech standpoint right away. But the money aspect is something I learned over time, and that's been quite fascinating to delve into. So here we are, 2025. Hard to believe. I always knew this time was going to come. It's the sound of inevitability. It is the TCP/IP of the trust layer of money. It's gonna everything you see here. It's just going to invert the financial system. It's going to invert the world, just as the first layers of the internet did. From my history there, we had a .com in our name. Banks were threatened to take your account away because you were an internet company, and it was big and scary, and the government was going to shut the internet down. And we're going to build our own internet, and it's going to be private and safe and secure. All this nonsense. And then, of course, everybody came right back down to TCP/IP, and the open protocol continued to march along and won out. And this is the same thing going on with Bitcoin. And ultimately, how do you scale Bitcoin? You scale with Lightning, which is a peer-to-peer system for transferring incredible, like unlimited volumes really. Started Liquid in 2019, always kept a close eye on Lightning Network. I like to follow what the top engineers are doing, and certainly having, your base layer of Bitcoin as that ultra trust, and then inheriting that into Lightning. And Lightning, for those who don't know what it is layer 2 to Bitcoin's layer 1. Bitcoin being very secure, excuse me, Bitcoin being very secure, and layer 2, it allows for micropayments and millions of transactions per second. There's really the theoretical limit is the speed of the hardware, and it's very uniquely designed, and it fits in for something we wanted to do in the 90s, which is have a open payment layer that anybody can use, and the response codes, the payment required 402, just like we see, website not found, paid, 404 error. Those are response codes. They've been in part of the internet since the late 80s, early 90s, built in every browser, every web server, and we never had anything that could fit that global payment network that nobody owned, anybody could use. It was, literally the internet itself until now, and that's where we see Lightning fitting in, and that's why I was always kept an eye on it. It's like finally 30 years later in my career at age, I guess I was, 49, I'm 53 now, but ultimately, being able to see that, and here we are. So we're being very aggressive about it. I put my own money in, and a lot, of course, and a lot of time, and we're all in on building this thing out here that anybody can use. I'll stop there. It's a long intro, but
Yeah, no, the hard part is which can of worms do we go down now? Very, very interesting. And yeah, I definitely agree with you. Bitcoin being an open money layer for, see it like TCP/IP and being able to, hopefully put a Bitcoin something in that 402 response code so we can actually have browsers be, authenticating payments is very interesting. But one thing I want to double click on, because you have an interesting background of part tech and then part leaning into the public markets, which is somewhat uncommon in the Bitcoin space, especially when you have like a strong ethos around sovereignty or anti-government, and you've kind of played both.
yeah.
What drew you to that? If you got in Bitcoin in 2011, but you're also leaning into, things like compliance and public markets.
Sure. Sure. Well, I mean, I got exposure to some of the public markets, the tail end of the dot-com stuff there. We survived the dot-com shakeout. We built out some data center stuff and other analytics things, and then we were ultimately acquired there. And, we didn't make a ton of money, but we survived, and we came out of it as young and like huge knowledge, and what we did lived on at some level. And so that was very interesting. So it always struck with me, and looking at sort of the Bitcoin space, you realize that, there's going to be a lot of pragmatic things to break down the barriers, and you're going to have, just back in the day, I had to go to, regulators were grappling with the internet, and tax departments were grappling with the internet, and what are we going to do? And so ultimately seeing the same kind of thing play out, and knowing that, look, we're going to have to do some hard things here. These things are real, and probably more so because you're doing finance and money. But ultimately it's, it will, the technology gets adopted when it's, 10x better than anything else, and this is, 100 to 1,000 times better than anything else, and people are beginning to see it. So we're working our way through that. But my background, sure, it is unique. I'm very tech oriented. I do, I call myself a coder, but I write my own scripts for things I want to do. And I wouldn't hire myself on as a coder, but certainly as a hobbyist, I do that kind of stuff there. So I've got that, and I bring the uniqueness from the public markets, where I've gotten an education there, thanks to my former CFO Kim, who's really taught me a lot. And she's on our board of directors, and it's been a real mentor to me over time. So she, having great people around have shared that knowledge. But one of the things that we've been able to do is take the legitimacy of public markets, which is the irony of Bitcoin. Bitcoin is ultimate trust, and then you've got over 2011, 2012, like endless token scams and hacks, and nobody believing in this stuff here. And the irony is using traditional finance to re-anchor trust in the systems as a bit of a hybrid, and which is one of the reasons we bought an exchange here. And back in 2019, that was after Quadriga and a bunch of others in the area just imploded and were fraudulent, and we felt we needed to step in. So yeah, it's a unique bridge. But ultimately this is, and we'll see. And some of the stuff frustrates me in the public markets, like the share issuance, the settlement times, the fact the markets close at a set time. It's just like, it's so foreign for where things should be. And everything should be tokenized. And despite the ICO stuff being, largely a big problem in our industry, the underlying concept of it is, definitely public market suited.
So you said you started Liquid in 2019, which is before the Treasury craze. So was Liquid, I guess there's a two-part question. One, kind of go more in detail what Liquid is, but
Right.
also maybe at the same time, was it first a Lightning infra company that became a Treasury company, or the opposite, or like what's the origin story there?
That is the grace. So the origin story for sure. So kept a close eye on Lightning. And so for those who, Lightning Network is the payment layer for Bitcoin ultra fast. And when we are a Lightning Network company. So how it works from a technical standpoint, let's be very brief. There's nodes and channels. A node is a server or computer somewhere running the open source Lightning Network software, and you establish payment channels with other node operators. And it works kind of like the internet in the sense that you send a payment and it may go from hop to hop till it gets to its final destination and it's settled. And it's got a lot of unique things about it. But the key is, when you want to establish payment channels with other operators, is that payment channel must have Bitcoin on it as a marker. So it's a requirement of the network. So in other words, we were a treasury company from day one, especially that's why we tap back into the public markets where we had success, raised capital, bought as much Bitcoin as we could, survived the FTX meltdown and everything else, and held on to the majority of our Bitcoin and kept going forward because you must have Bitcoin on the Lightning Network in order to be a Lightning Network service provider, which is like an internet service provider to provide backend rails. So that's the lot of water in between that, but that's the high level origin story.
Got it. And then so when I want to jump into yield in a second, because there's a
Sure.
lot to touch on there. It's very interesting, and I think some people know that you can earn yield on Lightning, but the figures are historically low, and your guys' are not that low. So that's very interesting. But
Right.
when did you switch into doing that to this blend of a treasury company that's also getting yield?
Well, our narrative on the treasury companies kind of changed this year because everybody's talking about treasury, and we're like, hey, look, we've been treasury from day one. It's in our prospectus. Buy Bitcoin, hold on the balance sheet. It underpins our share price as a net asset value. But we also put it to work, and we know at the time, especially as we started, Lightning Network was relatively small, growing, and we wanted to establish ourselves, plant our flag and our brand, and build out. We have 20 nodes around the world in 19 countries, and we have thousands of channels, and our nodes are all interconnected. And so we often see a lot of payments go across, may go across multiple hops. And what happens is, as a node operator, you get paid sats for every time it passes through one of your nodes. So it's an open marketplace. You can run a node, I can run a node privately, and we can set a baseline fee of what we want to get paid for helping to route a transaction to the next hop in the network. And so it's an open marketplace in that regard. We just happen to do it at scale. We do it very well. We use AI, which is, I know it's all the buzzword, but we actually do use it to analyze our information and make things route intelligent. And we know, and we've always said, we know we see the Lightning Network scaling to become that payment layer of the internet. And if it continues to do that, we're talking, potentially trillions of transactions down the line as it powers large portions of the internet as the open payment layer. So the potential for having a moonshot which pays off greatly, and from our Bitcoin ethos really supports Bitcoin and its bringing hard money and better money and trust as a protocol around the world and extending the internet to everybody else who needs it. And so just as the internet cleaned up or provided knowledge and transfer of information and education and continues to do that. Bitcoin, Lightning Network, hard money, but ultimately trust because it's immutable and it's going to be used in ways we don't even know yet. One of the aspects we like to talk about is, we think that just people paying people with Bitcoin is going to be the thing, but at the end of the day, it'll be machines paying machines for accessing and validating and all kinds of things. The AI sector, robotics sector, is going to be probably 1,000 times bigger than people paying people, and they need something which is instant, immutable, and just functions without any interference, and that's where Lightning Network comes in.
Very interesting. Yeah, and this yield piece for people, just to make it super clear for people, the Lightning Network is like it's a graph of nodes, and they route payments around. And if you're in the middle of one of those pieces, you could take a small sliver, and so that's how you're putting your Bitcoin to work in channels, and then you take a cut, and that's how you earn yield on it.
Correct. That is.
Histor
Go ahead.
Historically, that has been around 1% if you look at the data, but there are
Mhm.
outliers. Cash App famously, 9.7% is a number they gave. You guys recently posted you're doing double digits as well. So where's the disconnect here, where some people are just getting this low kind of safe yield and some are outperforming?
Certainly being in the middle of the money stream is a key. And just for instance, we did a press release a few weeks back, just before I went to Hong Kong, or when I was landing in Hong Kong, just give a talk at the Bitcoin conference. And we said, we're getting a weighted APR of 24%. Now, so for clarity, the reason we said weighted APR, because during this test, we deployed a lot more Bitcoin and much bigger channels and used new stuff that we've been working on for this yield and sats project, we call it. Yes, Project Yes internally. Is we're not opening all the channels at the same time. So in order to calculate your velocity and how well you're doing, you kind of need to have a weighted APR so it gives you a sense of what kind of traction you're getting. I think that number will probably normalize, come down to something more, you know, standardized, but it still shows that there's sats to be earned out there. And so our job as a company is simply to continue to get Bitcoin, deploy it on the Lightning Network, and earn yield in Bitcoin. So buy Bitcoin, deploy Bitcoin, earn Bitcoin. That's what we do. That's our model. And right now we have about 34 million shares outstanding, fully diluted, including warrants, etc. We have no debt. We didn't take on any treasury debt. We've got between 2 and 3 million cash in the bank, a relatively low burn, and we have a model that we're looking to continue to prove out here. So we built our network out. For now, we're looking to prove out that it can earn higher yield. And then what we want to see is how much Bitcoin can we deploy across it and continue to scale it. And part of the belief is, as you continue to put more and more Bitcoin to work on the Lightning Network, it becomes a self-fulfilling prophecy because the Lightning Network is a liquidity-hungry network. It wants Bitcoin. It wants liquidity. It's really what it's all about, which is why we call ourselves Liquid. We're a liquidity provider. LQWD is our ticker. That's our play on the word liquid. It has been like that from day one, with that mindset. And of course, we had LQWD as our name because we figured that would be our ticker symbol eventually. So there was some planning there, but nonetheless. So we're over the next few weeks, and we're working very hard right now and keeping a close eye on things and sending a lot more Bitcoin into certain aspects for Project Yes. Is what will the yields be? We're going to report it back to our shareholders saying this is what we're getting, this is the traction we're getting or not getting. So far, the tests have been good. We're happy with it. There's of course the challenges of keeping things rebalanced and the automation and things like that, but that's just normal. But for me, the number one thing I want to know is how much Bitcoin can we deploy currently? So far, there seems to be no let up what the upper level is. And of course, that upper level is going to grow over time in our view. And the network's been growing at triple digits. So it's a public company. It's kind of like we tie ourselves to the growth of Bitcoin, tie ourselves to the potential growth of Lightning Network, but so far has been growing, and let that carry us up faster than anything else can. And just focus on building, establishing our brand, establishing all the stuff that has to go around, including the reporting on the nodes and the auditing of the nodes that you need to have as a public company. And then just fire our moonshot and go like hell, and try to make a great success of it. So it's been very exciting.
Very cool. Yeah, is it YIS? Project
It is
Yes?
YIS. Yeah, somebody came up with that internally. It's saying yield and sats. That's all it is. We just yes for short. So you don't have to
Don't
keep
gotta get
typing.
fancy. It's in the name. Everything you need is right there.
Right there, right? Exactly.
So I guess one thing to double click on, and this is probably good for people to understand, is that um, as you mentioned, Lightning is a very liquidity hungry network.
Mhm.
But there's a lot of complexity in routing efficiently, which is why you mentioned things like AI and people use ML. So there's a one aspect of getting yield on it is putting the money in the right places. You want to be in front of where the demand is. And then the other thing you're kind of alluding to is that because there's supply and demand dynamics, the network could be demand constrained depending how much supply is out there, which is another angle that if people want to think about where the yield could come from or where it's going to go without speculating, you just have to ask yourself, do you think Lightning's going to be bigger in the future than today? Then there'll be more demand in the future, and then the capital will have to adjust to that. So anything you want to double click on there, I think it's interesting, but I want to make sure I'm correct on that.
You said it very well, and that's exactly what it did. So you see more entrants come in here as people pay through Bitcoin and use it. They also, one of the aspects that we've looked at and we'll keep a close eye on is, the network will be used for stable coins and other things can go across it. Bitcoin would be the dominant one, but ultimately it's an open payment layer and the Taproot we call it Taproot digital assets. That's the ability to have other assets go across Lightning Network, even though it is a Bitcoin native network. And so there's a lot of interest there in terms of where it's going to go. We're pragmatic in the sense that, hey, I don't think, the US dollar is not going to go away tomorrow despite its $37 trillion in debt. We'll continue to export that around the world in terms of the debt. But ultimately, and I've never been one of these, hey, Bitcoin will destroy the US government. We'll live in citadels and sing kumbaya and be happy. I think that's a horrible thought. And we need democratic nations to continue to be strong and be a voice. And this is just one more tool within there. So, initially it'll be pragmatic and hybrid. Some people will be pure Bitcoin. Some people may use fiat. It will do what it will do. And ultimately, the technology will march along. And once, I always like to tell people when a technology's been around for more than 15 years, it's like it's always been there. Can you imagine not having an iPhone? It's really only 20 years old, barely 19. But there was a time it's like, oh, this thing gonna stick around. But ultimately, once you hit that 15-year mark, you just can't imagine life without it. It just seemed like it always existed. And Bitcoin's at that point now where it's just always been there. And so from that perspective, we're just gonna get stronger, go from strength to strength, and life will continue. The internet, the revolution of the internet, will continue to as this next phase here, as we invert the financial system and invert money and make the systems 100x better than what they used to be. And it's happening quickly because time is compressed because knowledge passes so much quicker. And for those who've heard me talk in the past, it's like, yeah, I remember Yahoo putting engineers on a plane with hard drives to fly to Japan to plug them in to get the data over because you couldn't send it over the wire; it was too big. And you just thought that would be unheard of now. And so, unless it was something really, really specialized, but even then, it would just be unheard of. So,
Yeah, very cool. Yeah, it's a beautiful time to be in Bitcoin.
it
Uh,
is.
one last quick question on the yield piece, then I want to pivot to back to public stuff for a second. But you mentioned stablecoins, and this is a big point of divergence for people, which is do people want to hold the volatility of BTC? They're used to fiat mined, and stables aren't currently riding on Lightning yet. They're coming soon with things like Taproot assets. Spark is another kind of thing.
Mhm.
People don't need to understand the tech behind it. Um, but how are you guys viewing that when it comes to, executing against your strategy and like being early to things like Taproot assets and stablecoins?
Absolutely. So we've looked very closely at Taproot assets, and ultimately Tether's the big one that will go across it in Canada. There's not enough clarity around stable coins. So I wrote a paper called the Maple Act, which is a version of the Genius Act, and provided that to different members of government to try to at least have our voice out there in terms of how. Because right now it's Tether will be largely considered a security, even though it's not. USDC is in. So it is a public company, and we're not going to dabble in potentially transferring securities under current regulation. It's not, the upside versus the downside is not a good bet. So we
Yeah,
just prefer just to focus on what we need to focus on our yield project, just knock that out of the park, and I work to knock that out of the park, and then we'll take the next step as a clarity. But thankfully, there's a lot more clarity out of the United States, and a lot of the securities commissions around the world will look what's happening, the SEC and the regulatory environment down there, and they will take the lead from where 80% of the world's money goes through, and the economic superpower that is the United States. So we'll be patient.
makes sense. That's a good transition then, because I want to touch on what are the current frustrations or kind of like handcuffs that you have as being a public company, but touching Bitcoin or getting yield. Like these are very frontier topics, and what you can and can't do, what you can and can't say is kind of being built in real time. So like, what's the hard edges right now?
Yeah, that's a good question. And certainly, we are, because we're public, we are somewhat, I would say, slaves to whatever the market gives us. And we've seen, huge run up in price and a big run down in price. The Treasury sector get, hot for a long time, and then in selling off very, very quickly. And so, we've raised capital down the line here. We have an ATM in place that we're not using because we simply don't want to put more pressure on our share price. And we see, there's a lot of frustration from potentially, younger investors, newer investors who haven't seen large swings in prices, and they've, gone through exuberant periods. But ultimately, we don't control the markets, but we will work within it. And so we've had a lot of pressure for us to take on debt, do this or do that, and get a press release out and all these things. And really, when you're having a massive sell-off, when I've seen over the years that it's just almost uncontrolled. It doesn't matter what you do because it'll just, I'll make a blip in the market one day and it'll be sold off again aggressively. So you're better off to hunker down, stick to your game plan, control your burn, and wait it out, and then continue just to execute. So that's just what we've been doing. And so those are frustrations because it'd be nice, everybody likes to see more, say, stable markets and not quite so aggressive one way or the other. But we just have to work with what is given to us every day.
Makes sense. All right, kind of last couple questions, and we can bring this to a close. The Treasury narrative has been super hot this year. The more people I talk to, the more I'm like, there's so much going on with regulation clarity. How far can they go? Some people are getting kind of crazy with how they're doing certain things. But on the yield topic, you know, they're currently buying up globs of Bitcoin and they're just holding it as an appreciating asset. And it seems like the getting yield on that is the natural next step, but I'm not sure how many people are doing it currently is like one part. And two, like, do you think this is going to become the de facto standard that like a treasury company that doesn't deploy into yield strategies is like defunct?
Yeah, that's an interesting question. So I know, talking our own book, we're happy to buy Bitcoin and put it to work. And with Lightning, we put it to work in a non-custodial way. In fact, we don't give up our keys. We're not lending it out. There's no third-party counterparty risk. There's always technology risk. But with those, most of those are known and somewhat controlled, but ultimately there's no counterparty risk. And so, yeah, I do think you're going to see a number of companies and shareholders like saying, okay, well, what can you do with it? But at the end of the day, you can have an operating business and keep some of your capital in Bitcoin, and it can help underpin your share price. So we've been through the fluctuations where the FTX sell off and Celsius and all that terrible time. But holding our Bitcoin allowed us to, reinflate our balance sheet. Our net asset value continued to climb. So you're going to get that underpinning strength there, and we may be going to a time where that continues to hyper accelerate, and we give these companies an opportunity to do great things. It really depends on the management team how they want to do it, but there'll be more financial things that could be done with Bitcoin coming up here, and I think there'll be pressure from shareholders to do that instead of just simply sitting on your Bitcoin and not earning any yield. If you could earn like a money market style 2-3% yield passively in a non-custodial way, you're probably going to be forced to do that, or at least there'll be demand to do that, whether the management decides that or not. Some of the things you've seen over this stretch here, some of the we've been offered debt terms and other terms that just didn't make any sense. They just put an anchor around our neck and could potentially kill the company in the event that there's a bit of a downturn for too long. And so I think some prudence there is necessary. We're kind of 90-10, 90% into Bitcoin, 10% into fiat because we need it for practical purposes. Doesn't mean, of course, we're hardcore Bitcoiners and we know where we feel strongly where it's going. But companies will make their own decisions and how far they want to get leveraged up, and we'll just continue to execute on our model. And we wish the rest of them the best. And I do think you'll see some consolidation in the space, and you may see companies that are um, earning yield and earning stuff with their Bitcoin, getting higher valuations down the line, or potentially being bought out and consolidated into a company that may have a lot more Bitcoin on their balance sheet. I'm not saying that's going to happen or not happen, but you could see that's a natural progression. It would make a lot of sense. But we'll see. We'll see how the next few months play out. I'm feeling very very confident that we should have a really good end of the year here. October, November, however you want to call it. It reminds me of 2017. We don't know, of course, until things will play out, and we're just going to focus on what we can control, and that's try to get more Bitcoin on the balance sheet, try to establish more and more channels and nodes, and do what we do, execute on our plan here, and continue to demonstrate that we have the path to earn, buy Bitcoin, deploy Bitcoin, and earn Bitcoin, and that's it.
Makes sense. I love it. Well, this has been fantastic, Sean. Thank you for coming on.
Thank you for having me.
Very interesting what you guys are doing. I love the idea of putting Bitcoin to work, especially Lightning is one of the safest ways you can do it. Like you can go out on that risk curve very aggressively, depending on what you want to do in the crypto space.
You bet you can.
So very,
Wrapped upon wrappers, right?
yeah. So it's very practical the way you guys are doing it. I think that's fantastic, and BTC denominated all the way down is always great. Any closing thoughts or things you want to impart to the audience as we bring it down?
Sure. I mean, our ticker's LQWD. If you want to know more about us, feel free to reach out. We're pretty active on X. The last stretch here, it's just been too busy to get on X, and everyone's in a tizzy anyway. So it's distracting from an operational standpoint. But ultimately, continue to dig into Lightning, continue to learn about it, and hold your keys and do what you need to do. Or Bitcoin's a big part of the future, and it's a big part of the future because everything you're seeing here is a continuation of the revolution of the internet. just as we inverted everything back in the 90s and the 2000s. This is the next phase, and there's a lot of opportunity here to not just make a lot of money, but also to leave a real mark on how the world's going to run in the digital age for the next 200 years. So exciting times.
Well said. I couldn't agree more. I think that's a great way to end it. So, Sean, thank you for coming on the podcast,
Thank
my
you.
man.
Cheers.
All right.